Joining us now is Betterment CEO Sarah Levy. Sarah, it's great to have you back on. And I do want to get into the results of the survey. But first, just given the fact that we do have stocks at or near record highs right now, you've come on for the better part of a year, 2 years, and told us about how your investors that are engaged in the platform have been parking quite a bit of money in cash, in part because the rate of return has been so strong. What are you seeing now?
That's exactly right. I would say the cash story has been really an 18-month story. And in the last, call it 6 or 8 weeks, we've started to see our customers come off the sidelines with cash and start to move back into the market, back into more of a risk-on kind of profile. We're seeing that both in equities and also in bonds. So sort of two ways to re-enter the market.
All right. Are you seeing it in cryptocurrencies as well?
We are. In fact, in the fall, we launched a crypto portfolio, an ETF portfolio that has seen really nice, steady adoption. I think our customers tend to be a little more conservative, so dollar value is still low, but participation rates quite high.
Good to see you, Sarah. So in your survey, you say Gen Z is the least likely to contribute to a 401k at 79%. Does that, you think, have to do with the unique cost of living crunch that younger workers face? Is there an attitude about the market? Do you have a sense of that?
Look, there's a good news, bad news story going on, I think, in the retirement space. One reason Gen Z is participating at lower rates, I think, is because they're just earlier in their financial journey. And as you know, cost of living is high, right? And so, this is not the first thing on people's list in terms of where they're going to put their dollars when they're younger. And I think as they mature, they realize, it's more important to participate. I think what we are seeing, though, that's incredibly exciting is that access is really increasing to retirement and participation is increasing kind of overall. And so I think a rising tide lifts all boats, and that will be a great kind of long-term place to start.
What to do about this gap with small business workers and their retirement plans?
Well, I think, historically, if you worked for a big company, you had access to retirement. If you worked for a medium-sized company or a small company, those were not as available to you. The government has done a lot, actually, with the Secure Act to sort of push forward this idea that employers need to participate in their employees' retirement and in setting them up for a strong future. And so that's, I think, what we have to thank for the idea that now companies like Betterment have introduced affordable solutions for smaller and smaller companies, raising the profile of retirement, raising the profile of the importance of starting early. And so I think the gap is closing, but this is a long story, right? And particularly for Gen Z.
And what does it mean because you and I have had these conversations about all the white space that has existed and how much room, or I guess I should say lack of offerings there have been in the marketplace for this up until recently, at least perhaps. So what does it mean in terms of a growth opportunity and a business opportunity for Betterment?
So, we're incredibly excited about the white space. If you think about the fact that nearly 50% of workers in the U.S. work for small and medium-sized businesses, and historically, more than half of those workers have not had access to an affordable retirement solution. I think what's most exciting is not only that we now have those solutions, but that education is getting much broader, both with employers and with employees, about how important it is to have retirement as part of their benefits package. And so I think what's exciting is employees are asking for it. They're further asking for a match, and employers are meeting that need.
Sarah, how is the robo-advisor model doing at helping retail investors to buck that historical trend of, getting scared and, buying high and selling low, especially as we've had this rally that's had a few head fakes?
Look, the good news about what we preach, right, in terms of advice is slow and steady. It's, I like to call it eat your vegetables, but it's really about dollar cost averaging. It's about having a plan, setting goals. All of that doesn't change whether the market goes high or low. And I think in some instances, actually, maybe folks may have been too reticent and too eager to leave cash on the sidelines because of those high headline rates, really said to people, like, let's put our cash here because of the volatility. But I think what we're seeing now as the market kind of soars is if you have the patience and a long-term outlook, it's better to be invested. And that's really what we're seeing with our customers and what we seek to advise our customers on.